I wonder, from your vantage point with the $1 trillion in assets, broadly speaking, at your firm, how do you judge the progress of the companies that you're investing in or make those decisions? What kind of metrics are you looking at, and how much can you believe them in terms of deciding what the gender diversity of a given corporation looks like?
Well, the good thing is that as we think about gender diversity, what you're seeing is more improved metrics and more disclosure, whether it be at the board level or at the company level. So we're looking at, first and foremost, starting at the senior ranks, what does the leadership team of the company look like? For example, if you think about McKinsey's study, Diversity Wins, they've been doing this for the past 5 years. There is a tangible case for a business case for diversity. And in gender diversity, we see that those top quartile performing firms, in terms of their representation of their senior leadership team, they perform from a profitability standpoint about 25% better. And we also see those lower quartile firms in terms of gender representation. As you might imagine, they don't perform as well. We see that is symmetrical, a positive correlation at every step along the way. So we're looking at that representation at the board level. We're looking at it at the executive level as a firm focus in terms of the progress that companies make.
Yeah, well, money talks here, certainly, and given, your decision to allocate assets in certain ways. But I wonder, do we ever get to the point where some of the bad actors are actually called out? Where corporations that are not doing a good job on these things are actually taken to task publicly?
Well, I think we see moves towards that. Think about the move made most recently by NASDAQ in terms of representation on boards, both from a diversity on a gender and an ethnic diversity standpoint. And we're seeing it by the way that companies like ours invest in how we vote with our pocketbook and our shares. We're also seeing that in areas like supplier diversity. So while I would say over time the movement has been slow, I really believe that it's picking up steam.
Chandran, I'm curious. We've talked about this on our air in the past, but I think it's worth revisiting it again. And that is, what is the business case? What is the investment case for encouraging more gender diversity?
Well, I talked about it on one level in terms of the relative profitability.
Yep.
And so, again, that McKinsey study, this was done across over 1,000 large firms, over 15 countries. But I also want to talk about the cultural benefits. So if you look at research that's been done, it shows you've got higher trust, you've got more inclusion, better creativity, even better risk controls when you have meaningful gender representation or gender diversity at companies. So one can argue in simple terms that you actually got stronger cultures when you have that representation. Now, the progress has been slow. We need to see that accelerate. And the next thing I would say, Morgan, importantly, that the progress we've seen, while moderate over the last decade, it hasn't really included all women. So when we say female diversity, it has to apply to all women. So that means we see much more in the way of strides in ethnic female diversity, in particular programs for Blacks, Hispanics, and Asian women.
Shepard Smith here. Thanks for watching CNBC on YouTube.